Hi, everybody. Welcome to today's webinar. We're very happy to have you. So we're going to start off with a quick introduction of our panelists and speakers, and then go into a presentation by another speaker, and then go to a discussion with all of our great panelists, and then end with a live meet and greet. And we're super happy to have everybody here today, and we're ready for a great presentation. Okay, so just to introduce myself very quickly, I'm Chinasa. Currently, I'm a third-year PhD student in computer science at Cornell University, and I'm working as a DOWA Fellow for the past year or so. So I do research mainly in the areas of like AI and global health, and have been learning more about the African venture capital space, and have been investing and advising in startups, and I'm definitely looking forward to learning more from this presentation today, this panel and presentation today, and engaging with our fellow speakers. So going into our webinar today. So over the past decade, we've seen an explosion in the amount of capital invested in early stage startups across the African continent. And within the past few years, we've seen notable exits from the likes of Paystack Konga in Nigeria, Nimbula Fundamo in South Africa, and Kngine in Egypt, and much more. And so we see that as the amount of investment in the continent rises, we're sure to see many more exits down the road. Today, we're fortunate to hear from people changing the current face of VC in Africa, and we welcome them to the panel and presentations today. So first up, we have Aaron Fu. He leads growth at emerging market inclusive tech focused Catalyst Fund. He's a general partner in Africa, focused founder, backed pre-seed fund Sherpa Ventures, and he also co-founded Virtue for Africa, a fellowship for talent on the continent and beyond to gain experience with early stage African startups. His energy comes from building, scaling, and investing in technology products in corporate and startup environments. He's co-founded both B2B and B2C businesses in Africa, and he's led seed stage equity investments in 20 plus startups totaling 2 million plus. He's driven the exit of 3 startups in Africa. He also sits on the board of startups ranging from agri-tech to transport, and has worked with hundreds through partners like Visa, MTN, Airbus, Societe Generale, and the World Bank. Prior to the Catalyst Fund, he was a managing director of Nest, Africa's largest pre-seed incubator, and managing partner for Africa at Nest VC, a Hong Kong-based fund which he joined after a career in financial services. All right, and next up, Samir Mella. He is the vice president at Vested World in Chicago, which focuses on investing in agribusinesses, consumer products, and technology-enabled business sectors, primarily in Ghana, Kenya, and Nigeria. Prior to working with Vested World, he worked in finance at Signified in the San Francisco Bay Area, which is the world's largest provider of guaranteed fraud protection. It enables online retailers to increase sales and open new markets while reducing risk. He's also worked as a consultant at PwC Advisory and Stanford Healthcare. He has a mechanical engineering degree from UC Davis and an MBA from the University of Chicago. And next up, we have David Ogundecko. He is the founder and CEO of Funema. He's a polymath generalist who has been building companies within the venture capital space for over 4 years. He has a broad career journey operating in fields from advisory and market intelligence to energy infrastructure financing. He's built and currently manages a portfolio of companies with over 20 million USD. As a result, his career is an amalgamation of his background in both software engineering and infrastructure financing. Mr. Ogundecko is a man of faith, a theoretical maths and physics enthusiast, and curious about quasars, pulsars, binary stars, and quantum entanglement. And next up, we have Joe Kimby. He's the founder of Hook, an investment club that funds and supports early stage and tech-enabled startups in Africa or the African diaspora. Starting in April 2020, the club aims to invest in founders and teams with domain expertise, technical know-how, and have attained some traction within a large defined opportunity. He was previously the head of finance at Touch Tech Payments, an Irish fintech startup acquired by Stripe in 2019. Joe was a chartered accountant with experience across the financial sector in Europe. And last but not least, we have Toby Lafinhan. Toby is a civil engineer who caught the tech and entrepreneurship bug and is currently the co-founder of Venture for Africa. He took the first of many leaps by moving away from home and joining a tech startup in Nigeria's economic center, Lagos. This kicked off a 4-year journey that led him to become the head of recruitment at an international nonprofit, investing in aspiring African software entrepreneurs. There, Toby led and managed recruitment processes and funnels across 5 key African markets, recruiting founders across 18 companies backed by over 1.8 million in seed funding. His most recent leap has been to pursue his passion for finding and recruiting talent by co-founding a startup called Venture for Africa, with the mission to bridge talent gaps for Africa's fastest growing tech startups. He writes about productivity and workplace tips, tricks and hacks on Medium, and co-hosts a podcast focused on conversations with 20-something other-year-olds about life, the world, and everything in between. Please welcome our panelists and speakers for today.
All right, thank you so much. So welcome everyone to this amazing panel put together by DOWA. So my name is Toby, and I'm just going to be running through, something very quickly, which is just around the connection between talent and venture capital. So just 1 second, let me share my screen. All right, great. All right, so, I'm co-founder of Venture for Africa together with Aaron, who's also on the panel. And what we're really trying to do is to help fast-growing startups on the continent get access to experienced talent. So today, obviously, we're talking about venture capital in Africa, and I'm sure the panel will do that part of the conversation justice. But before we dive into that, I thought I'd share some quick notes on the link between talent acquisition and venture capital. So, as you'll probably learn from this panel at some point, there's 2 major things that VCs tend to look out for when investing in a company. One of it is if there's a great product, and the second thing is if there's a repeatable and scalable sales process. But what do we think technically drives those 2 engines? And well, it's talent, right? So it's not surprising to see that 76% of hiring staff say that attracting quality candidates is their biggest challenge. And here's one big reason for that. When it comes to talent, the laws of demand and supply also apply. And what I mean by that is, as more companies building great products begin to emerge in our ecosystem, and we've seen quite a lot of those, and as capital continues to find its way to these teams, the demand for talent has since outstripped the supply that's available. According to Partech Africa, which is an Africa-focused fund, startups in Africa raised, I think, $400 million in 2015. And flashback to 2019, that figure went up to $2 billion. So with the number of funded businesses actually doubling year on year. So as teams continue to scale, founders and VCs have slowly found themselves spending nearly half their time on hiring conversations. According to First Round Capital, around 50% of founders spend 50% of their time hiring new talent. But technically, founders and VCs tend to deprioritize conversations around hiring, mostly shifting the ownership of that bucket of work to other teams. And one after effect of this is that teams who do that find themselves paying for it in future, either with more time spending when you're trying to hire or with, spending more dollars trying to chase the teams that you're trying to build. And so such teams throw money at some of their hiring problems in an attempt to buy their way out of the mess, which ultimately drives up burn rates, but not necessarily the outputs the team is producing. So you're stuck with a higher wage bill, but you're not necessarily producing enough to account for your increased burn. And this eventually raises or inflates the talent market, as we've seen, so far. But some VCs have started to recognize this gap in sort of like placing talent on teams and have started to provide assistance. So major firms like Andreessen Horowitz in the US, First Round Capital, and a couple of other firms are beginning to offer recruitment services to some of their portfolio companies. However, this is technically being focused on finding executives. And so don't get me wrong, right? Executive roles are important for critical hires, or they're critical, when you're looking at the foundation of a startup. But as startups reach the growth stage, product and technical teams, are the structure that enables this growth to take place. Therefore, find that top VCs are also connecting their portfolios to recruiting and talent firms like VFA that understand the local talent pool, the work, and I work hand in hand with executive teams to really make sure that teams have a right product and culture fit. Now, this connection with talent programs is quite important because 70% of the workforce is composed of passive talent who aren't actively seeking full-time opportunities. And 75% of hiring staff have agreed that attracting passive candidates is more of a challenge than attracting those that are actually out there looking for work. So wrapping up just very quickly, I think the main thought here is that talent is one of the major pillars that drives VC investments in startups. But a lot of that tends to be focused on founding and executive teams. However, when it comes to fast and successful growing startups, or how fast a successful startup will be, the focus should be on the executing teams. The catch, though, is that the global workforce is filled with passive candidates, and they need a different kind of attention before joining new teams. Therefore, if founders and VCs don't prioritize efforts in efficient talent acquisition, retention and just onboarding, it would ultimately drive up the cost of an investment and minimize the opportunity for growth. So yeah, those are a few thoughts on how talent technically connects to VC. And I'm sure the panel will throw more light on that side of the conversation. But what does this mean for those on the talent side of the conversation? Well, first, a few more stats. 73% of job seekers say that the process of looking for a job is one of the most stressful events in life. I can probably agree to that. And in a recent survey we conducted at VFA as well, 57% of job seekers say that finding the right opportunity is one of the most challenges or the biggest challenges that they struggle with. But what if you could get access to not just opportunities, but also the right context, the right support to succeed at some of Africa's fastest growing teams? That's really what we've set out to do at VFA, where we enable experienced talent who might be new to the startup space or the particular market they're trying to enter to soft land and gain context while working with a startup that's hiring. So feel free to check out our website for more information on how we're helping young professionals really make that leap. But thank you so much for listening. I'm looking forward to really enjoying the rest of this panel.
So now we're going to go into our panel discussion for today with Aaron, David, Samir, and Joe. Let's get started. So to all the panelists, we would love to learn more about your fund specifically. And feel free to mention any notable investments you've made and or exits that you've had.
I can go first. So I work at Vested World. So Vested World is an Africa-focused VC fund. So we invest in early-stage startups in East and West Africa. So we primarily focus on 3 countries, which are Nigeria, Kenya, and Ghana. We also look at opportunities in 4 other countries, which are Uganda, Ethiopia, Tanzania, and Rwanda. And from an industry perspective, we invest in kind of 3 broad sectors: consumer products, companies, agriculture, across the entire value chain. And then we also invest in what we call tech-enabled businesses, which are companies that are leveraging proven technology and applying it into sectors that to increase performance and efficiency within those sectors. And yeah, so from an investment perspective, some of our recent investments, we invested in a company called Vanu recently, which provides off-grid internet connectivity for mobile. We've also invested in a company called Drugstock a while back, which has a procurement platform for medical devices and for medication for pharmaceutical products. And then Sendi is also another investment that we've made, which is a logistics company that's based in Kenya. And then we have also invested in a company called Tomato Joss, which is a Nigerian company that makes tomato farming, and they're now building a factory to do processing of those factories. So kind of broad, set of companies and diversified portfolio. But yeah.
Awesome. Thank you, Samir.
I'm happy to go next. So hi guys, thanks for having me again. Like I think of my portfolio as sort of in 3 parts. So my biggest portfolio is where I spend most of my time at the Catalyst Fund. So we've backed about 37 companies across the last 5 years, across Latin America, Africa, as well as India, primarily focused on inclusive tech. We have companies like Chippercash, who recently went on to raise a very large round, SocoWatch, who recently raised about 14 million. So in total, our portfolio companies in Catalyst Fund have raised more than 133 million. This is backed, of course, by the UK government as well as JP Morgan. So it is very sort of philanthropic and impact orientated. I've also recently launched with a few partners, Sherpa Ventures, which is an Africa-only fund focused on pre-seed. We only just started in December. We've made about 3 investments so far, including Boost, which is a last-mile logistics provider for micro SMEs, operating in Ghana, Nigeria, as well as South Africa. As well as OnePipe, which is a financial services API, trying to help people build on banks like much quicker and easier. We're roughly going to try and make 1 investment every month going forward. So please look out for that. And then finally, I have my own sort of angel portfolio, which doesn't really fit into any of those. One of my favorites there is a company called Nala, based in Tanzania, which is sort of an offline payments transfer, but now pivoting into remittances, specifically from the UK. And interestingly enough, Nala was actually Excel Partners' first investment in Africa. So we're also, I'm beginning to see a lot more interest from the rest of the world into investing in Africa right now. So that's kind of broadly how I see my 3 portfolios. And of course, I get to work on much cooler projects like with Toby on Venture for Africa as well.
Oh, awesome. Thank you so much, Aaron.
Yeah, I think I'll go next. I have to say that I'm actually quite happy being in this panel because I thought I was alone in what we do in Phonema, which is focusing on ventures that are um, targeting very difficult infrastructure problems in last mile communities, which is quite different from your regular VC focus, where you're looking at companies that can easily scale, and pretty much going in the same trajectory as you find most Silicon Valley ventures. So I just heard Aaron Thu's journey and also the other guy from Vested World, and I said that's actually quite interesting. And for Phonema, we focus more on entrepreneurs who are targeting last mile communities. At face value, these founders appear to be social entrepreneurs, building very difficult businesses that could be quite asset heavy. And I'd like to focus on one of our investments that we had way back in 2017. It's a company called OSB. And they started by offering microloans to open market traders, open store market traders, very petty traders. In Lagos, we call them your Iyalata and whatnot. And then we found out that these businesses didn't exactly have a very strong credit profile. They were underbanked. Actually, they didn't even have bank accounts. They didn't have smartphones. They didn't have access to the internet. And our approach is very, very, very different. We went very, very, very analog, very manual. We would go to them face-to-face, interview these traders. We would decide on who to give loans by using the head of the market, women association or whatever group they had there, and use that as our vetting process to decide who to give loans to. We would actually take loans in cash because they didn't have bank accounts for us to do any bank transfer. And the loans that we would give out to those businesses would be between $800. Back then it was 30,000 naira, 36,000 naira, depending on the exchange rates, and $1,000 US. But what I find very interesting about the growth of that company is over the past 4 years, we've been able to help these petty traders transition from being unbanked businesses into businesses that have a savings profile with us. They're saving their money with us. They're accessing much bigger loans through the company's balance sheets. And now they're doing these transactions with through the savings accounts that we created for them. And to me, that's one of the companies that I'm super proud of. And it stands as a strong validation for the focus of Phonema, because what we focus in Phonema is a poverty problem that we find locally. And we know that if you have, try to imagine all of the SDG goals out there. Imagine that they're all monsters. I would say that poverty is the food that they feed on, because a poor man can't afford to feed, can't afford water, can't afford healthcare, and doesn't even have the luxury to worry about climate change, right? And we know that the poverty problem needs to be solved. And of course, yes, we can say that there are many angles to solve this. We can look at government welfare programs. We can look at government building infrastructure over time. But when you look at the way African countries are structured, it's actually quite different. We don't really have the luxury of government stepping in to provide well-structured welfare programs. So we decided that entrepreneurship is going to be a way through which we can solve this problem. But I also realized that traditional venture capital is not structured to address the poverty problem in that way, because if you come to most African countries, their markets are so fragmented that a lot of the investments happening here happen in bubbles, right? Sectors that might have developed over time because of vested interest from the government side, like in Nigeria, for example. We know that the banking sector is quite advanced, and because of those verticals that have been built over time, it's much more easy to target fintech companies playing in that field. But what about the other sectors, like logistics, for example? I was quite amazed by Aaron mentioning their recent investment in a logistics company in more like a last mile and playing in different countries. That's actually quite impressive, because we need more investments like that. So we target founders who made it their burden, their life calling to go to areas where it's not exactly traditional, it's not exactly vanilla for high-tech startups to go into. And because of that focus, these founders tend to not get the kind of support they need when it comes to venture capital, and also when it comes to access to talent. And we give them, first of all, human capital to structure, to help them, which is quite similar to what Toby was saying. The companies can't really grow locally because the talents that you find out there are not exactly structured, or they didn't exactly go through an education process that makes them ready for the future of work. It's actually quite remarkable. So we give them that first of all, and help them to build a business model that is validated, commercially ready. And when they get to a point where they're quite, they're quite stable, then we know that they're ready for institutional capital. And then we take them to the next level of providing financial capital. Now, this is a very, I would like to call our model more of a permanent capital approach, because it's if you look at that approach and if you compare it to the traditional life cycle of any venture capital fund, it's grossly misaligned. So we don't exactly call ourselves a regular VC, even though we play in the VC space. But we know that your Silicon Valley style of venture capital cannot work for Africa because the environment, the market is quite different.
So my name is Joe, and I'm the co-founder of Hoke. Hoke actually stands for half a quarter. So we're an investment group that focuses on investing in tech or tech-enabled early stage companies in Africa and beyond. So like so far, we've invested in tech, in fintech, logistics, and tech to date, about 10 investments so far. And this year, we're actually aiming to deploy $1 million USD to African founders who are solving Africa's hardest problem with technology. So we started Hoke, so myself and UB, because we wanted to get into angel investing, and we actually didn't have enough money to do that. So what we did was we reached out to our network and say, hey guys, can we all put some a couple of 1,000 each together to invest in 2 companies that we think are great. And yeah, so we raised about $20,000 in our first community round, and we ended up investing in 2 companies. Those 2 companies actually are doing quite well so far, and so we call that like a very nano fund, no hope one. And we went out to our friends reach out to their friends. And that's how Hoke became Hoke. Chinasa is actually an investor in Hoke. And what we're really hoping to do is leverage on the community to, write very small checks to these companies or these founders that are solving very hard problems. And then we will leverage on the community's strength to support these founders. So in addition to cash, we're giving them support from looking at the pitch decks or from, looking for the next big hire. Our community are people like Chinasa, young professionals that are working at big tech companies across the world, and the goal is to ultimately grow this into something that is fully sustainable, and we can turn into a venture fund where we're really put money and resources towards companies and founders that are solving these very tough problems.
Yeah, thanks so much, Joe. And also, it's been a great experience investing with Hoke so far. So definitely encourage it for everyone in the audience, and we'll definitely get into that a bit later. So going on to our next question, it's why Africa and why now? What encouraged you to actively invest within the continent?
The question I'll ask you is why not now? The reason why we started this, so I worked at a company prior with a Black co-founder. And one thing that we struggled with is just raising money. We did, eventually raise money and we exited. But speaking to other founders in Europe and Africa, it was just a challenge for all of them to get money. So so when I say we invest in Africa and beyond, we actually have invested outside of Africa, but our focus is Black founders because that's a problem that we really wanted to solve. And when you look at Africa, there's a lot more information than ever. Technology has evolved to the point where anybody can actually start a startup with, AWS, and there's a lot of tools out there. But Africa has a lot of problems that needs to be solved, from logistics, infrastructure, the basics, there's so much problem that needs to be solved, and the people that can solve that problem are these people who are building businesses on the continent to solve these. So this is the best time to go there and work with these founders and ultimately build a better and stronger Africa for all of us.
So I think one of the biggest reasons that keeps my focus on Africa for the last, I would say 7-8 years, it's just been the kinds of problems that you're sort of able to try and solve, right? Sure, you can back, a founder that's trying to make laundry delivery quicker in San Francisco, or a founder that's trying to bring aggregate 4 super apps together in Hong Kong. But like, I guess the kinds of problems being solved, the kinds of problems these entrepreneurs are trying to solve are much more fundamental. And the kind of impact it could potentially have is just really transformational, on not just a small segment of the population, but really sort of like on an infrastructure level, right? Like if we can get addressing right, if we can get KYC right, if we can get identity right? A large reason why I invested in OK High in Kenya very early on was because we saw sort of like the sheer difficulty in operating in life without an address, right? Like the challenges in finding employment and getting a bank account, it's really, really hard. So the upside of getting some of these solutions right is just huge. And also like the process of, solutioning for it is also like a lot of fun, right? Because like your day is so there's so much more meaning, and like, it's just a lot wilder to get to work on. Finally, I also like to say that like, in terms of like geographies where, there hasn't been as much investment, especially in technology, Africa is really sort of the last place where there hasn't been that much investment yet, right? So I think the growth potential over the next, I would say, 8 to 10 years is going to be really significant. I think we're still yet to sort of cross that hump where we started rocketing yet, but I think it's a really exciting time right now where a lot of the foundations are being kind of laid. So yeah, that's kind of my 2 cents on why Africa is exciting.
So I completely agree with everything Joe and Aaron said. So in addition to that, I think one thing, I think from a demographic perspective and economic growth perspective, Africa has, as we all know, amongst the youngest population, the fastest growing young population, and then also just rapid urbanization that's happening. I think all of those things create opportunities and also challenges that entrepreneurs are working on solving. And yeah, I think in addition to that, like I think despite the opportunities, I think the flow of capital on the continent has been, relatively, low compared to other markets. So helping entrepreneurs solve some of these challenges and, bridging the gap between, the capital that's needed to like really move the continent forward, and is something that I'm passionate about. And as Aaron mentioned, it's also like get an opportunity to see a lot of exciting companies, and that's something that I really enjoy. Companies that are looking to solve real core problems in a wide variety of sectors.
Awesome. Thank you so much, Samir. And so going on to our next question, we know that, fintech is super popular within the African continent, but, what other market trends have you noticed, and like what areas are becoming to be more popular?
I can answer this. So over the past year, one thing we've seen is there's been a lot of capital inflow in education. Education because like the workforce in Africa is quite young, and I think it was Toby who mentioned like demand and supply. There's just not enough talent on the continent, and a lot of startups are really trying to speed up that process and have a more educated workforce so that we can actually like really build these companies and have the right resources to support these companies, because like it will be unsustainable where you have to hire somebody from San Francisco to work in Lagos or to work in Nairobi, because they're going to ask you for SF money. You can't actually afford that. So like, is that the best way to deploy your resources? And in my opinion, the answer is no. But if we have a very well-educated workforce who can really play a part in building your businesses, you can obviously pay them a higher premium locally. But still, when you compare that to SF wages, it doesn't actually compare. So that's the first one. The second one that we've seen is the health space. Like our health infrastructure overall is poor. And a lot of companies are really trying to solve that problem. So one that I've been following for many years now is Wella Health. And over the past, again, 12 months, I've seen just so many people who are really trying to come up with a solution that they can adapt to each market that they operate in. And so I was in Kenya last year and I wanted to get my COVID test. And there's this company called Tibu. Tibu comes to your house and gets your test done. I was like, this is amazing. And a lot of Western countries are not doing that. So like you can just see if we innovate, we can really make changes, not just locally, but also globally. So those are the two spaces that I am actually hoping that our community can actually invest more funds in. And in addition to that, also support these founders to kind of build and scale faster so that we can fill that gap between the supply and demand.
I was just going to say that, like, Joe, big fan of Brother Health as well. They're part of the Catalyst Fund portfolio, and I think it's a nice segue into like a point I quickly want to make, that, like, I think fintech has kind of been a big attention seeker over the last couple of years. And I think a large reason for that is because it's one of those products that's like much easier to scale across multiple geographies. Like once you've built like a payment system in one place, it's easier to go across others. Once you build a partnership with a Pan-African bank in one location, it's easy to scale together with them across others as well. So it just lends itself a little bit better from a scalability perspective. I totally agree that sort of, health and a few others, and education as well, are really exciting new sectors. I'm particularly excited around the models around financing and paying for health, as well as financing and paying for education, right? Because like, while the delivery of it definitely can be tweaked and definitely can be enhanced, I think it's interesting to leverage what we already have and then figure out sort of models to actually deliver what we already have too. So I think that's another thing I want to mention. The final sector that I also like to mention, so maybe logistics too. I think increasingly, maybe on the back of AFCA and a few other interesting developments, there's been a lot more focus around the movement of goods, both cross-border as well as, from distributors through to the last mile. There's so much inefficiency there. And there's so much to be gained by just sort of being an aggregator and sort of like being able to smoothen out that supply chain. So I think logistics is also going to be significant. And I think we're increasingly seeing sort of like fintech playing a role in each one of those different verticals as well. So I don't think we're going to see fintech fade away. I just think it's just going to be a bit more ubiquitous.
I would like to go to your point, Aaron. Yes, fintech would not fade away. Maybe we might get a bit much more deeper than just focusing on payments. That's what I'm seeing happen lately with investments in companies like Okolo and OnePipe. So now we're looking at more of a platform and infrastructure enabling solutions, which is actually quite interesting. And I think that Aaron and Joe have given this question much out there, a lot of justice. I would just say that I'm quite happy. I mean, it's a sad thing though, that we had a pandemic, but it's sort of like forced focus away from existing models that are very easily scalable into models that are now more last mile. Now we have for logistics, we used to have more upmarket solutions and investments flowing into that space, but now with the pandemic, we're seeing investments in companies like One Kiosk Africa, which is more of a last mile logistics model. So, and I think that we're going to see, we'll be seeing more investments like that.
Awesome. Thank you all so much. And so our next question is, what has helped you become successful as an investor?
Like, I mean, for Hulk, we're just starting. Like, we're at a very early stage, and it's going to take a while to really say that we're successful. Right now, our measure of success isn't necessarily the exits, because when you're in this space, like, exit means success. But for us, we're not there yet, because we're at a very like pre-seed or seed stage, and like harvest hasn't happened, and it's going to take a while, and we're going to have to invest a lot of time into making sure that harvest happens, but also it's like a good harvest. In terms of success, we're really assessing how many founders we're talking to on a weekly basis. So me and Newbie, who's my other co-founder, I think on average, we're talking to like 2-3 founders a week. How many people we're engaging in the community, and how many people are we actually getting on that ladder of angel investing? So like we do Q&As, we do like office hours just to talk to people and help them. Like, even if they don't have the money, at least they can like understand the space of angel investing. So like the community is growing. So we started with, there are 18 of us. I think we're just over 200 people in the community now. And we're actually aiming to reach about 1,000 this year. And like, even if all of them don't invest, at least they understand what's happening in the angel investing space. They have some visibility over what people are doing on the continent, what people are building, and if they can actually help. So that's how we measure success. But again, very, very early days, and we're putting a lot of time into it. The hope is, for this to help these founders go to a stage where they can actually go and raise more funds, because the challenge is at the bottom. Like, Cheaper can raise a Series B because they've actually managed to raise a seed and Series A, but a lot of companies can't even get the first check. So if you see, I think the CEO of PiggyVest, she started first check recently to fund female founders, and we need more people like that at a very, very like pre-seed stage. And we want to play in that space to the stage where they can go and raise more money. So one of our investment criteria is, can you actually go and raise more money? And if you can't, then like it's not in the best interest of the community, because in addition to supporting you, we also want to make money, which is let's not sugarcoat it. So yes, but that's not the number one goal. But again, it's just worth checking all those boxes before we go ahead and invest.
I would say that in my case, success it's in two ways, and the first one, I may not need to say it because it's more of a broad and long vision. I started Fundamo because I was passionate about solving the poverty problem, and I'm hoping that I'm trying to envision a future where we can have more successful small businesses locally, right? And we target founders who are helping micro businesses grow through digital innovation. Because if you look at the statistics in Nigeria, 90% of businesses registered in Nigeria are micro business. That's a very terrible reality. So I see a future where we have, that number is greatly reduced. It could be maybe 50% with micro businesses, and the rest are split between small, medium, and large scale businesses. Because when we have that kind of reality, it means that we have more businesses employing people locally and paying them good income, something that is sustainable and probably scalable. And when we have that, it means that we have more consumers with a higher purchasing power, and it means that the market can be a bit more mature, and that can also support innovation, because if you have more people we can pay more, it means that we can have that can fit into the requirements for addressable market size for tech companies, right? And then it means that in the future we can have more local exits, and then that can then create wealth. But this is a 20, 30 year, 40 year journey, and I may not live to see that happen. But if I bring it down to what I can achieve today, and that's see my founders grow, and to me that's what gives me up at night every day.
I just really want to say that like what Joe is doing is so important, and like it's been so incredible to see a lot more of these vehicles come to light in sort of recent months and years. It's so important. I firmly am believing that the best investors in the next generation of founders are sort of previous founders themselves. 60% of the LPs and investors into Sherpa Ventures are former founders themselves. Many of them have also exited businesses. And 40% are sort of active, global angels who have invested in LATAM and Asia and Middle East together with me, and they're writing their first Africa checks. I think the point I want to make is that, I think each individual vehicle and mandate that we have has like slightly different success metrics, right? So like with Sherpa Ventures, maybe similar to Joe, like, our key metric here is to drive interest and success for people that have not invested in Africa before. You'd be surprised like how many founders really don't have experience on the investing side, and we want to really make sure that they get more comfortable with that, so that when they do exit at sort of the C and D rounds, they do channel capital back in. That's a really large goal. We have a very large goal to expose African pre-seed deals and early stage deals to investors in the rest of the world as well, to help de-risk their first check-in, because while we've seen, venture capital in Africa almost double year on year for the last 3-4 years, it's still not enough. It's still a drop in the ocean. We need to catalyze way, way more. And so like that's the mission of Sherpa Ventures. My own angel portfolio is there to take wild bets, like no data room, like no financial model, that's fine. Like I measure that by like how many wild things I can do. And then finally at the Catalyst Fund, like we have very clear goals around, number of underserved customers that are being served, amount of capital that has been unlocked after our investment, post our philanthropic impact investment. So I really feel that success depends on the mandate and purpose of each of the individual vehicles that you're running. I think there are a few vehicles out there where sort of have blended models, and I think that has sort of led them into a few sort of difficulties, right? Where are you optimizing for return? Are you optimizing for diversity? Are you optimizing for customer reach? Like what are you optimizing for? And very often it becomes very difficult to address all of those things equally, right? How do you optimize for, all of these things in an equal kind of way? So, I'm really lucky to be able to sort of split those mandates across multiple vehicles. So anyway.
Awesome. Thank you. Thanks, Aaron. All right, Samir.
Yeah, like not much else to add, but yeah, I think from an investment perspective, I've been investing in venture capital on the continent for a little more than a year. So don't really have a long track record, but my colleagues have been investing longer. But I think some of the things that are going to help me become successful in investing is one, similar to what was mentioned earlier, it's like understanding the local challenges and the context and honing in on like some of the core problems that entrepreneurs are looking to solve in a sustainable manner, so that there's some value creation over time. Focusing on that, I think, will be helpful. I think building partnerships and also like a strong relationship with portfolio companies, like so beyond just providing capital, contributing towards fundraising, strategic advice when it comes to like operational, if they need help with operations, I think that's an important value that an investor should add to portfolio companies. And then lastly, just in regards to just kind of contributing to a broader ecosystem, and kind of building, continuing to build, strong relationships with entrepreneurs and other co-investors, I think is critical to become a successful investor.
Awesome. Thanks so much, everybody, for the insightful answers. And so we kind of got into this and some of the answers. So I would love to know more about like what challenges have you faced investing into this market, and also like what risk do you foresee just in general? So.
I think probably the main risk that I see is just, I think compared to maybe the US markets, which is very, very deep, and there's a wide variety of potential financing and exit opportunities. That same level of depth is not available in Africa, in most parts of the world, but especially in Africa. And I think that limits both the amount of capital that companies can raise, and then also from an exit perspective. But I think that's changing over time. But I think that's going to be a challenge in the coming years, at least.
Yeah, I think where are the exits has definitely been a war cry from a lot of LPs for sure. I definitely think that it will be changing in the next 3 years or so. We hope there definitely is an increase in that. I think the real question though is sort of like what exit numbers make sense, right? I think while the recent Paystack event was definitely seminal and has made a lot of headlines and it drew a lot of attention, I've never seen like a wave of Silicon Valley VCs look at Africa as post that point. It's just been crazy good for PR. But here, one of the questions is like, is that a big enough exit? Right. I think a lot of investors into Paystack maybe came out of it with 25, 30x in terms of like what they were able to get, whereby really from a portfolio perspective, you're talking about pure Silicon Valley VC, you need to target sort of 100x and above, right? So is that even enough? Or do we say that actually we don't need 1 in every 50 to succeed? We want 25 out of the 50 to succeed. And maybe the 25, succeed in much smaller exits. Maybe they exit only at 6x, 7x, but there's a lot more appetite there for sort of like lower prices. But is that something that we're willing to do as investors? And I don't mean at a GP level, I mean at an LP level, right? Is that a return that, other investors can digest? I think that's been a hurdle. But I want to share like my most recent personal hurdle is just like not getting to meet founders face to face. Like I think that's been hugely impactful to our ability to deploy capital quicker and with more confidence. Just not being able to like, sit down for a glass of wine with a new founder that we work with is just really, really tough. Really changes the level of due diligence that we need to do. And very often what that means is that we end up having to go a lot deeper into their numbers, their financials, how they approach customers. And that can be a bit frustrating for some first-time founders. But yeah, it's been a wild sort of like 12 months for sure, at least in the due diligence side.
Yeah. I mean, to Aaron's point, it's right about the exit opportunity in the market, because we can't really have the Silicon Valley type of returns, 100x. But I'm really hoping that the recent is it ACTA, AfCFTA, the African Continental Trade Agreement, I'm hoping that could really open up the market for acquisitions. Like if you look at, because I'm envisioning in the next 5 years, maybe less than that, we can have more South African established corporates moving up north, because they have this up north policy recently that was launched in 2018. Because if you look at the Nigerian market, ShopRite recently closed. Maybe they wound down or they shut down the operations. But in my mind, I was thinking if they had acquired Abano, which was a very strong global player, and Abano understands the Nigerian market, understands the dynamics, they probably would have gone out of business. So I think that with the AfCFTA agreements, we can have this open border policy, and African countries can get to understand themselves better, and likewise the businesses as well, and then we can have more acquisitions. In the next 5 years. In terms of IPOs that can give you the windfall, that might be much longer. And I think that it's nice if we can have LPs who really understand the reality and are willing to put patient capital and celebrate the wins when they come. But I see acquisitions as a very strong way to start driving exits early enough. And I can see that that could really ride on the back of the AFCT agreement.
A lot of our panelists actually kind of broached this already. And so we want to know, what do you want to see in the African venture capital ecosystem 5 years down the line, or what do you even expect to see?
50 more Joes is my wish.
I love all the love. Yeah.
Again, like I think David alluded to this as well. Like I think we do need to get more creative with regards to like our funding mechanism. So increasing appetite for that, increasing appetite to experiment around that, even though it's a smaller vehicle, to prove that some of these perhaps self-liquidating instruments could work. I'm speaking extensively with a lot of firms that are US based to try and deliver more liquidity at an earlier stage to a lot of founders and early employees into African startups as well. So hopefully we see more pathways to get liquidity earlier on in that journey. I think that will catalyze some more capital in. I hope to see about 50 times more of these sessions, right? Because I think as a question that came up on the Q&A, it's like, how do we get these stories out there? How do we get these opportunities out there? There's so much appetite and interest, but that specificity around like how to get involved has still been lacking. And I think if we're able to unlock that, that would just be absolutely incredible. But, primarily 20 times more, Joe.
Thank you. One thing I really want to see is more African companies and startups building for the world. One thing that I've seen is a lot of African companies are building for Africa, which is great. Like, don't get me wrong, but like, when are we going to see Flutterwave do business in LATAM? I see Pagals trying to go into LATAM. I don't know if they're there yet. But like, I want to see more African. They are there, okay. Like more Pagas that are building for the world, and like one company in our portfolio is actually actively targeting the US, which is like yes. And when they start talking to US customers, the customers are like, "But your product is so cheap," and I'm like, "Yeah." They're like, "Well, we're building for this market." And you have to kind of adjust your price to this market. So now, like, we're talking to the founder just to figure out like what is the right pricing strategy, depending on which region you're playing in. Should you have your pricing on your website? Because like, your customers are going to come from everywhere, the US, Europe, and so on. So that I'm really, really excited about, because yeah, it's great to build for Africa, but like I want to see more companies building for the world.
Yeah, thanks for saying that, Joe. I would say that we should meet my founders, because they are building for the world. We have a company here in South Africa, and over 60% of their client base are based in the US. They have over 400 customers, and the rest are spread across the rest of the world. In Europe, and also in Asia, we have maybe just 1 or 2 customers in Africa. And in their industry, they have the best software. I mean, we've had clients say that they leave more expensive Europe established brands to come use our own products. So yes, we do have some startups building for the world, but I do agree that we need more of them. So what I would like to see in the next 5 years, it's there's an article that was released on the tech blog based in South Africa, and the writer was talking about the need for more camels. That perhaps we might be wrong in chasing unicorns. And I think that's actually quite right. Camels are efficient. They can withstand very adverse environments. And I think that we need to see more of those, because I believe that unicorns ride on the backs of thousands of camels. And what you see here in Africa is that we don't really have that environment. So it's been nice to see funds, to Aaron's point, funds that are structured to find those businesses and invest in them and let them grow. The companies that can hit a market cap of about $100 million and they could be acquired. And then who knows, once we have that saturated market of good performing SMEs and strong tech companies, then we can start having easy opportunities for the unicorns and of course the local IPOs, because I would like to see IPOs that are done locally. But I don't think we can do that, because every time an IPO happens, the wealth transfer doesn't stay in Africa, it's outside Africa, right? So I want to see more of that happen locally. So that's maybe that may not be the next 5 years, but anything can happen.
Like wallet transfer is something that we really care about, because like more of our investors are now coming from Africa, invest in African companies. So like we're hoping that there's exit and that money stays in the continent, and there's a ripple effect and multiplier effect for more Africans with more money who can fund more companies.
So I think the only thing I'll add is like I would love to see strong feedback loop when it comes to like capital. Like, I mean, I think the more capital that goes into the continent, the more the companies can do. the more people that they can hire, create jobs locally, and then hopefully, that would lead to exits, and which would lead to more capital. So like I think seeing that type of like a feedback loop would be something that I would love to see on the continent, because I think the reason why people put a lot of money in Silicon Valley is because the companies that are there have done really well. So like seeing that kind of builds up on itself over time, and would love to see that in Africa as well.
I just want to add quickly on what Joe mentioned, that like in terms of mission, like the first venture capital firm I joined, Nest, which was targeting Africa, its primary mission was to invest in African startups to take out of Africa and to get to Asia. So that was the primary mission for what we did. There were some companies like Superfluid in Ghana, who we got a couple of contracts with banks in Hong Kong and in Singapore, and just the ability to kind of like watch that product manager's face, think about like the kind of things that they can procure from Ghana from a data science perspective to enhance their businesses is just incredible, right? And I think that's also about changing mindsets and changing sort of like how they think about it. So that was like endlessly happy and successful for us as well. So I definitely share your ambition, Joe, that like I think the more companies that are built in Africa that go for the world are amazing. One other company that I invested in, my first investment actually in Kenya, Onger, which is a CRM platform, they never built for Kenya. They only built for the rest of the world. The team just happened to be in Kenya. And if you went on their website, you could never tell that they're a Kenyan company. And the conversations I had with the founder there was like, well, the rest of the world can pay way more. There's also that, right? And they're sort of able to like tier that pricing. And sort of really be able to grow quicker as a result. So yeah, totally hear you on, I think there was a period of tech import, and I think we're sort of still in a period of sort of like where tech is built for problems on the continent, and like the future period of like exporting that technology is going to be like super exciting. I think we're already seeing that from a talent perspective. So I see a lot of, mobile money experts in East Africa getting placed, in Myanmar and Cambodia, Indonesia and elsewhere to like lend their expertise, but how do we export the actual tech and the companies out as opposed to just the people? I'm excited at that way for sure.
Exactly. Awesome. And so as we round down our webinar today, I would love to ask the final question, where we talk about, what tips do you have for those looking to invest in Africa, African founders, whether it be through angel investing, syndicates, or through traditional VC?
Get started with what you have today. It's the primary thing.
I would say be patient. Just be patient. And, and start where you are and then grow from there. It's more like stocks, but different. But be patient and grow.
Yeah, I don't think I have any specific advice. I think it's similar to any other investment. Do your diligence, know the team, and yeah.
Yeah, I don't think I have anything particular apart from founders should do their DD and know exactly what they need, how much they need, and who they need to raise from, because a lot of founders don't even know where to start, right? So they need to do their homework, and like also network. Like networking is great. Like you need to. It's easier to get an intro from Aaron or somebody here or yourself in Chinasa than you cold emailing me, right? So like do your network, get to know the people who might introduce you to like your next angel investor. So like it's a lot harder now it's a lot harder, but also easier with COVID and everything else. But like it's follow the people on Twitter, network with them, get to know them, get them to know your products, and hopefully they can introduce you to somebody who might find you.
Awesome. So yeah, thank you all so much for this great panel discussion that we had today. So many great insights and answers from all the panelists. All right. So we do have a couple of questions that have been asked already. And so the first one is, what is the best way of addressing the lack of knowledge within the African population living in Europe and / the West around investing in Africa and seeing the huge potential in the continent? They said they're asking this as an African living in Ireland and have always wanted to find a way to invest in Africa, but have not had enough knowledge about what there is to invest in. I think this would be a great question for Joe because he's also in Ireland, so yeah.
I wasn't going to disclose my location because I want to be Coinbase so bad, but yes, like we're a community. We started here, we're based here, we live here, and there are like a couple of resources. So there is Future Africa that also started last year, and they're very active in investing in Africa. So more than happy to intro you there. There's a company that I'm currently talking to based in the UK, and they're actually building a platform to allow people to provide loans to companies starting from Ghana. And you can you can log in, put in I think it's as low as £200, where you can just put money towards companies that are raising money, but in form of loans. A company's called Wekr, WEKR, and great idea. I think they're obviously fundraising right now, but when I looked at a platform like this, it's actually great, something that I would use. And there has been a lot of African companies that they've raised in Europe. So one that we actually invested in is Eversend, and it did a crowdfunding round last year based in France, and I think they raised like $1 million. So it's useful to kind of keep your eye on all these crowdfunding platforms in UK and Europe. Like you'll see some investments. The other one so I found out about Eversend through the Flip.Africa, which is a newsletter that writes on Africa tech and the ecosystem. So it's definitely worth subscribing to that. And so they release articles every Sunday, and I think they're doing like a sort of like a podcast style during the week as well. A lot of resources, and that's where I started with, and I quickly connected with so many people in the ecosystem. So it's good to know these outlets. And once you sign up to the Flip, you'll discover a lot more newsletters and platform where you can plug into to find out what's happening on the continent.
I probably just want to say, maybe reflect a little bit on why you want to invest. Is it are you optimizing for returns? Do you want to get more participatory? So for example, if you do want to get very, very hands-on, I totally agree with a lot of what Joe mentioned, right? Reach out to some of these collectives that can feed you deals, attend a lot of these demo days, read a lot of these articles that come out, reach out to these companies and have a chat with them and see if they're keen to bring you on board as an investor. I think that's an incredibly sort of hands-on approach, and I think it's incredibly fulfilling, right? I'll also say that Joe probably didn't want to talk about Hoke, but go reach out to Joe about Hoke and see if you can co-invest alongside them. And I think having a group of people go on this journey together with you is really important, right? So for example, at Sherpa Ventures, our Slack group is always really, really active with a lot of first-time Africa investors, asking a lot of questions of other people and sort of vice versa. So I think go on this journey together with individuals who are also on this journey together with you is probably my other piece of advice. And actually just because we mentioned crowdfunding, one of Catalyst Fund's portfolio companies, ASAC, which is a motorcycle lending company in Uganda, it's actually now on republic.co, which is also a crowdfunding platform. In the last 5 days, they've raised more than 200,000. I think they're going to way exceed their target. So there's a lot of these sort of platforms also highlighting African startup opportunities. But if anyone in this room, if you'd like to reach out for a one-on-one chat, very happy to talk to you about those opportunities too. I think it's a very important part of what we do, and I would like to be a part of that. So yeah.
Awesome.
Yeah, same here. My email is just samir@vestedworld.com. So feel free to reach out.
Attendee wants to know, are any of you all involved in social impact investing?
Catalyst Fund is all about impact. Our key metrics are, number of underserved audiences that now have access to financial services, and sort of lives impacted as a result. So, absolutely, I'm involved in impact, and it's really fulfilling, for sure.
Yes, same here as well. It's all about impact for us, and we measure how many micro businesses we've helped to grow into small businesses through the investments that we're making in the startups that we work with.
Yeah, we also have a strong impact focus at Vested World as well. In addition to financial returns, we also have a strong impact angle.
The next question, I think this is probably directed towards Joe. They asked about to share the list of tech outlets again, and I can start off with some ones I know as well. So within the continent, we have Tech Cabal, and also I'll put these in the chat. WeTracker is very popular. TechPoint Africa, Disrupt Africa are very large ones as well. And also Steers is a great one too.
And we're an investor in Steers, so.
Awesome. I would also add a TechPoint to that list as well.
Yeah, I think TechPoint just actually hired their first writer that's focused on directly on the continent, which is dope. So yeah, that'd be very interesting. So yeah, we don't have any more Q&As. at the moment, but I do have some other questions I did want to ask. And so I think this would be a great resource for founders in the room. And so I would love to learn from the panelists, what tips do you have for African founders who are seeking to raise capital?
I would say, from my own perspective, focus on building your business. It's much more easier raising capital if you have a strong business model and you validated your business, because it makes it easy for the investors to understand the journey and to see the way out and to see how they can make your returns. So I would say focus on building your business, understand your customer base, and the problem you're trying to solve. Forget about competition. Well, not exactly forget about competition, because you need to understand who the other players are, but we believe that your biggest competitor is the problem with the customers that you're trying to solve. So if you have like very keen focus on your business and your target market, raising capital becomes much more easy, because it's easy for the investors to see how capital will flow into your business and also flow out. So yes, focus on your business and then capital will follow.
All right.
Yeah. In addition to having a really strong product that can win, I think building your network early on with both investors and other entrepreneurs, and asking for feedback from people that have kind of taken the steps that you're taking, I think is helpful. And then I'll also encourage you to do your research on like the firms that you reach out to. Like you want to if you're looking to like for seed capital, I would encourage you to spend a lot of your effort and resources towards engaging with them. And then as your company scales, you can engage with like different levels, different types of investors. And then I think the last piece is just like raising the right amount of capital that you need to scale the business. So if you think you need $50 million to grow the business over the next 5 years, you don't necessarily need to raise all of that all at once. So looking at like how much money you need to like get to that next level, I think is important, and like will also help not have your share of the business be too diluted. So just be I think those are probably just a few pointers in regards to just fundraising. I think that also helps in regards to like if you're close to like closing out a round, it creates some opportunities for investors to kind of crowd into the investment, versus like if you have a lot of room, they might so just some advice when it comes to fundraising.
Awesome, thank you.
I want to add to that, and like one thing I say to founders is build for your customers. Like if you can actually do that and do it really well, like your customer, your product will be great because it's serving your customers and your customer base will grow. So when I'm not doing Hoke, actually 9 to 5, I work for a company called Stripe. And like when Stripe started, I don't know how many years ago, 10 years ago, like Stripe was super obsessed about customers and still is. And our products are for our customers, and our customers obviously being payment companies, but like our core customers are engineers who are building this solution. And Stripe is super obsessed over ensuring that the people who are integrating these solutions can actually use it. We solicit feedback from them like quite regularly, and like Stripe is a multi-billion company. So if you focus on building for your customers, like you like investors will come to you, want to give you money, because obviously they're paying you for this product that you're building or products that you're building, and everybody wants a piece of that, because ultimately you build, customers buy, and the cycle continues. Just to add to this, one thing I saw on Twitter recently, and I'm going to paraphrase here, it said it's great to raise money, but how about running an actual profitable business? Like not everybody needs to raise money, and if you're running a business that's profitable, like focus on that and grow it, because instead of you keeping, I don't know, 70-40% of the pie, you're actually keeping 100. And there's nothing sexier than running a very profitable business and nobody's actually having a piece of that pie. So up to you.
Yeah, I maybe we're going to double tap on what Joe mentioned. Like, not every business needs external funding, and you might need one jolt of external funding, maybe your angel and seed round, and maybe that could be your final round as well, right? Obviously, there are situations when you have a competitor who just raised 20 million and is entering the exact same market, in which case maybe you should. But Joe is entirely right. There are many businesses out there which you could run for a long time without raising external capital. So I definitely say that. And then finally, I guess on the networking component, like I think a lot of founders think that that, you only have one shot to like pitch an investor, but like, really focus on that relationship building long term, right? Like even if the product isn't ready, even if it's just an idea phase, like just reach out and like talk about it, right? Like I think like, and I love feeling a part of like the ideation process of founders that we work with. There are about 15 I speak to at any one point in time who haven't even quit their jobs to like start their business full time. So like, I think there are a lot of people out there who are willing to sort of ideate and bounce ideas off you, with you, and don't treat it as sort of like a single pitch and that's it, right?
Yeah. Awesome. So we actually have a attendee who has come up on stage. And so Ose, we would love for you to ask her question directed towards any of the panelists.
Thank you so much for sharing your knowledge with us. Really appreciate it. So my question is, directed to David, and I'm so interested in that particular sector. So I'm from Ghana originally, and most of our people to equity traders, like one of the issues that we face is that when they get loans from the banks, it's really very high, so they can't really do the work with the money that they give them. So I'm interested about how do you do your due diligence about these African micro petty marketers? Like how do you do your due diligence, and how do you what resources do you provide for them too?
Okay, so the loans have been provided by one of our portfolio companies, but because of our hands-on approach to our investments, so we're pretty much involved in the process. So when we started, we were using information that was already pre-existing and in the hands of, because if you notice, most of these traders tend to have associations, and they will have like a head of the markets. In Nigeria, we call them your lodger or our lodger or what have you. And they tend to sort of control who gets to trade in those markets. They decide who gets to rent a shop. They decide, who gets to stay or when to leave if they're not behaving properly. So we use them easily to identify customers that have a bit of I would say, good character. And we know that if we were to give them cash, we have someone who's standing as a guarantor, but not just a guarantor, but also as a pseudo cash collector or debt collector, if you will. So that's how we started. But over time, we've been able to build our own credit data from the current loans and how much they keep coming back to borrow and how quickly they're able to pay back the loans, and use that to create a simple decision-making process that we're now leveraging on to decide on who to give loans to. But as the company is scaling, we're looking at a different method, because now we're looking at providing these businesses customized POS machines, and then use that to gather transactional data, and then we can have something that's pretty scalable. Currently, we have about over 4,000 customers, but we know that the current system can't really scale. But in the future, once we have the POS machines in their hands, and now they're also using the corporate accounts that the company's given them, then we can now use that data to improve on our decision-making process. But when we started, it was purely analog, purely manual, not very, very sexy.
Right. Thank you so much.
Awesome. And I'm going to ask very quickly, I would love for the panelists to share their contact information in the chat. We do have a couple of attendees asking, so feel free to share any social links or website links as you wish. And so going into more questions, we have a lot coming in, so I'm going to answer the next one. So one attendee is asking, are there any health tech startups focused on Africa's healthcare system that you feel are going to boom in the next 10 to 15 years? How can undergraduate students get involved in these startups?
Yeah, I mean, as far as getting involved, I mean, I think I would encourage you to reach out to like the entrepreneurs on LinkedIn or other means to just get to know them better. And as far as like the companies that are going to be the healthcare companies that are going to do well, I think there's a lot of companies. Yeah, I don't know. There's a ton of companies out there. So maybe like, doing some research on looking at some like research reports on the healthcare space in Africa, I think will be something that I would encourage you to do. And in addition to that, also, I'll share my email address, but feel free to reach out to me and we can kind of have a more in-depth conversation. But there's a ton of exciting healthcare companies on the continent. I think it encourages to like build a network with them early on.
There's one startup I've been following for like 3-4 years now. It's called Wella Health. And what they do is, I think they started with like digitizing the pharmacy process. So like instead of you going to they help pharmacists digitize like their records and all that kind of stuff. But now I think they're moving into like the micro insurance space for people, like micro health insurance space. So Neto, who's the founder, a doctor, I met him here in Dublin a couple of years ago, and he's gone to raise like a couple of rounds, and he's building something very exciting for Nigeria. And I think he's in Ghana, not too sure, but personally very excited about what he's building. I'm not an investor or anything, but so the company is Wella Health. Just I made in the chat there. But yeah, super exciting. And yeah, and Neto is a great founder. He was a doctor, and then he actually pivoted into founding Wella Health. So can't wait to see what they can go on to achieve in the next 4, 5, 10 years. And I believe that he's in it for the long run. So yeah, and like even if you can't get a job there, it might be worth even just chatting to the founder. I'm quite sure he has a network of a lot of health tech startups that he might connect you to.
Awesome. And so I want to give a shout out to DOWA very quickly, the organization that's hosting this webinar actually. And so we do have internship programs, and we've had I would say a couple dozen or so students participate across a range of companies, including David's at Funemas. And so definitely I would encourage you to check out our website, dowaafrica.org, to be in tune about future internship offerings, which is, the attendee asked, I've heard a lot about investing in bigger African countries, but what about the smaller ones?
When I saw this question come in, I was super excited to answer it. I feel like a lot of current investors are sleeping on Francophone Africa. And before this, I actually did some research. I want to see if I can find this data. I think 29 countries in Africa actually speak French, and that's more than 50% of the overall, more than 50% of all African countries. So like you don't see a lot of funds going to the like of Senegal, Ivory Coast, Togo, and so on. And I feel like investors are sleeping on these countries. There are a lot of challenges, obviously, and political is just one of them. But I think once I think there was a company, I think it's called Jamo.ci, who just they got into a YC this round, and they're doing like a fintech bank for Ivory Coast. Super exciting. First company from Ivory Coast to have gone to YC. So but I know that's just one of many. Yeah, I think over the next couple of, say the next 18 to 24 months, you will see more founders coming from these countries that you've never heard of, like Gambia or Guinea. But I think it's going to take time, right? So because a lot of funding comes from the US, which is obviously an English-speaking nation, like people tend to go where they're comfortable and where they, when things are very similar. So one thing we want to do at Hoke is very diversify across the continent. So talking to Jamo, talking to a couple of other companies, and the focus right now is just to learn about those ecosystem. And personally, I'm from Togo, so I try to go back home as much as I can. And I'm hoping that with COVID allowing, I can actually go to more Francophone countries this year and meet the founders and just try to understand what's really happening and see how we can play part in that ecosystem. But I'm quite sure we're not the only group that's looking at Francophone Africa. And hopefully in the next couple of years, there's more funding going towards these founders so that they can build also this part of Africa that everybody's forgetting.
I'm very certain there'll be more funding into Francophone Africa in the next 2 years, for sure. I think I'm very lucky to have one of our investments in Kenya. The founder is actually Togolese, and just like Joe, I think we're trying to understand. It's a digital savings app called Koa.
Oh yeah, I know him.
Yeah. And I think definitely trying to explore more Francophone Africa. I think I'm likely going to start doing that primarily through my angel portfolio. We're at Sherpa to build transparently. We're absolutely speaking with individuals who can be co-GPs with us to build a Francophone Africa focus fund. I think currently we don't have the right capability to look at it, and certainly not the right familiarity with it, but certainly want to spend the next sort of 12, 24 months sort of learning a lot more before we sort of press the pedal to the metal there. So yeah, very excited about those markets. I think one comfort thing that we need to get to though is sort of where is the follow-on capital going to come from, post-seed, right? Like how many A and B investors are actually actively looking there, and is that even necessary, right? Or is the seed round the last round all they need to raise? I don't know, but yeah, I think we'll definitely see a lot more.
Hopefully the seed is the last round they need to raise.
Yeah,
I think that'll be good for everyone, right?
No more dilution.
That's it.
Awesome. Thank you all so much for the great answers. And so a question I want to answer next, I want y'all to answer next actually, is what is your target LP profile and how do you approach them?
Yeah, for us, most of our LPs are US based, like family offices and high net worth individuals out of the current fund. And our approach to them is just building relationship over time, getting to know kind of what their goals are as far as like investment targets, and then also just from an impact perspective what they're looking to do. So like that obviously takes time for the next fund. In addition to family offices and high net worth individuals, we're looking to expand beyond that and maybe bring on institutional investors, development aid organizations like that provide LP capital, and then they obviously have a different angle as well. So kind of so that's something that we're also exploring for the next fund.
At Hook, our LPs are working professionals. So we're LPs of the fund ourselves, and so far we haven't actually done any like outreach. It's typically a recommendation from people who are already part of the community, and we like it like that. We've kept it like I like to call it, we're still in beta. So it's typically referrals from people who have experienced what we've been doing and they want to get involved. We've also seen a lot of people who are not accredited in the US and they still want to invest. So they come through our vehicle. So that's kind of the profile. So we have two profiles. We have active investors and also passive investors. So like if you don't know anything about this space and you can't actually help a founder, you can just sign up as a passive. So you just put your money and then leave it there. But like we're more interested in active investors because that's where the value add comes from for our founders, because these people come with so many different skills and knowledge that they can help these companies with. And one thing that we're hoping to see is like our LPs go on to work for these companies can be the next CTO, because I don't know if you all heard there's like a CTO shortage on the continent, and they're the next big hire that they make. But like it will be a very easy hire because this person probably has worked with a company through advisory via Hook. So like we really want to see more active. But if you don't know anything about the space but you like the company and you believe in what you're doing and the mission, you can just come on board as a passive investor and just put your money towards a company that you're interested in.
Yeah, just want to double tap on active LPs. So all of our LPs commit to 10 to 20 hours every year to work directly with our portfolio companies, either in an advisory capacity or really just like getting stuck in and building with them. 50% of our LPs, we bring them on board also because we know that they can write follow-on checks and come together for the founders if we need them to. But I think, yeah, the primary lens we look, especially as I mentioned earlier, the purpose of this fund, right, is do we think that these individuals are individuals who will continue to back startups in Africa by working together with us and sort of go on and do that subsequently? If we don't see that, then we're unlikely to work with our LPs. In terms of outreach, just like Joe, I think nowadays a lot of our LPs come from referrals from our current base as well as our founders. And we don't really do a lot of active outreach. Actually, just to be clear, we're not allowed to do any active outreach because of SEC regulations. And we do only look at accredited investors as well, at least at Sherpa. So I think as to any emerging fund managers out there, look at your structure and what you're allowed to do before you dive in.
How are y'all ensuring that we don't end up with a more unequal society with regard to the future Africa, so that we don't end up increasing the already high, I guess, Gini coefficient, even with great products coming out of the continent?
Yeah, I think I'd like to touch on that first because that is something I'm very passionate about, which is why in Fundamo, we like to focus more on businesses that are targeting last mile problems. And one of the key metrics that we have for success is how many small businesses can we, or how many micro businesses can we ensure are growing through the services of our portfolio companies, right? And also our portfolio is being designed to make room for companies that can be potential unicorns, maybe, I don't know, top 20% or top 10%. But a lot of value is being placed on companies that can go into camels. Maybe they're worth a couple hundred millions, and they could be acquired, or they could provide dividends over time. So because we know that the Silicon Valley model, it's really nice, but I don't think that can truly address the problem of inequality, because in the African reality is quite different. Poverty is really high. I mean, over 40% of Nigerians are actually poor. They live on less than $380 a year. That's their purchasing power, and that's insane. And if you look at the way a VC is structured, is the big winners are either the founders or the LPs who invest in them. And when these companies exit, the wealth transfer doesn't exactly happen locally. So we know that we can address that inequality in two ways. In the future, if we can have a society that is a bit more economically balanced, we have more small businesses providing more jobs, and then we know that we have more people earning good income with good purchasing power, and they can access quality healthcare, shelter, and whatnot. Plus, if we can also have IPOs happening locally, right? If we can have the Nigerian Stock Exchange revived, I mean, even the Johannesburg Stock Exchange in South Africa cannot compete with what we have outside. So that's actually that's a serious problem. And if we don't solve this problem, no matter how many exits we might have in the next 10, 20 years, we're just feeding the top 1%, and nothing is going down to the guy who's living in a shack at Makoko area. He has no idea what's going on, and we might be talking about billions of dollars being pumped into Africa, but they don't really know what that means, and they don't even really care. So yes, we are hoping that our work can be one of the instruments that we use to address that, and we hope to see that change happen 10 years from now, or maybe 20 years from now. We know it's not a quick game; it's a long-term play for us, but we're willing to pay the price, and we're willing to work hard.
Awesome, thank you so much. And so we've actually come to the end of the webinar, and we thank everybody for their great questions. I know that some of them are being answered directly by the panelists themselves. So again, we would love for you all to follow up directly with the panelists as you wish, and continue to engage in this conversation.
Hello, everyone. My name is Ola Irabobo. I am one of the co-founders at DOWA, Doing Good Work in Africa. I just want to start by thanking all the panelists. I know you guys are very busy people for taking time out of your Saturday to spend with us at DOWA and share lots of great insights with us. Thank you for all the audience attendees that joined us also, spending some of your Saturday with us. And thank you, Chinasa, for moderating this webinar. There was so much information. I'm going to have to sit down and watch this webinar again. I took notes, but over the course of several months, we've had several webinars that have been focused a lot on what innovation is happening in Africa. And obviously with innovation, there needs some kind of funding for those creating those different innovations at different levels in different sectors. That's why we decided to have this particular webinar and bring in those that are actually doing on the forefront of investing in various sectors and various innovations that are presently happening. And I hope you guys got a lot of feedback from this. I definitely learned new things, being an active investor versus being a passive investor. That's definitely something I'm very interested in, and how we're able to pull in talent. I think for every organization that, or every innovation that comes up, there are people that behind that, supporting that, including talent. And I'm glad that we were able to have Toby from Venture for Africa to share some of those insights. That is one of the reasons why we started DOWA also, to help in terms of supporting those innovations that are happening in Africa with talent, which happen to be students, brilliant students in universities in the diaspora, supporting through internships and through collaboration and interaction with those on ground, making those innovations happen. And I think some of the other things that we really want to see is more collaboration across different sectors, more collaboration with Africans in the diaspora, even with pulling their money and investing in these innovations that are happening. And there were several investors and venture capital individuals that were on this panel and have ways of helping us do that, helping us with how we can do our due diligence to make sure that we're actually putting our money where we feel comfortable and we know what's going on. We appreciate everybody joining, and we want to just express the importance of networking. So please take advantage of the fact that people like Aaron and David and Joe and Samir and Toby are sharing their information with you to connect with them because they are very busy people, as I said. But I want to thank everybody for participating in this webinar, and I hope that everybody was able to take something at least away from this. We'll see you at our next webinar, which will be next month. And please reach out to us about all the other programs that we have going on, including our internship programs. Thank you. Thank you so much, David. Thank you, Aaron. Thank you, Samir. Thank you, Toby. And thank you, Joe.
Thank you, everyone.
Thank you.
Thank you, everyone. Thank you.